Hey everybody, welcome back to FSP Forex-Stock-Predictions. Hope you're all having a great Monday. To start the week off, we are going to be looking at a double bottom pattern that has played out on the 4-hour chart for British pound versus the US dollar. Please remember to hit that like and subscribe button. I am the Vortex Trader, and let's get into the chart. So what we are looking at is the 4-hour time frame on GBPUSD, and what we can see, let's bring this chart back into view. Right, I'm going to zoom out quite a bit so we can actually see what is going on here. Now, there's a few things that I have noticed, right? Firstly, we can see price has been making lower lows. Ready? One low, second low, third low, right? A reason why I think that price could be reversing and it's time to have a little bit of green bullish price action is because of the MACD below. We see divergence playing out. We see the MA lines on the MACD slowly increasing. As you can see, I've put an arrow sloping upwards, right? We see the same with the histogram. We have one low, we have another low, yet we have the histogram weakening, right? This means that the sellers are weakening out. Even though price is pushing lower, the sellers themselves are actually weakening out. Okay, we have some strong bullish volume showing up in our volume bars. This is all little bits of confluence that we can add to our mindset, right? To tell us that if we trade a particular pattern, these are certain things that we have to watch out for. Okay, we do have volume decreasing slowly over time, like this. This generally indicates a move of some sort coming up relatively soon. But however, this did not play into our strategy today. So what I was looking at today was the double bottom that sort of presented itself to us on the 4-hour time frame. Now I have marked up a neck zone. All right. This is an area of interest and liquidity that I like to see price break above before waiting for a retrace, in which case I would enter long. Okay, now this trade played out at the end of last week, quite late. So this is why I'm showing it to you guys now. So what we see, let me delete this quickly to show you. Let's move this a bit here. Right. Price came down, made one bottom, came back up, came back down again, pierced a lower bottom, right? But we have divergence on the MACD within these two price regions, right? One low, second low, MACD histogram weakening, MA lines weakening, divergence is clear. Cool. So what do? When price comes up to the middle section, which I call the neck zone, I like to generally place it on the chart itself. This is within the middle region. Yes, there it is. So I've highlighted it. We've put the neck zone above. Cool. Now I was waiting for price to close above it, which it did in this candle right here. Let's make it a little bit clearer for you guys. This candle closed above the neck zone. Okay, slightly above it, right? Once that happened, we were waiting for a retrace to come back into the next zone. Let me delete this quickly now. We see that the following candle retraced perfectly right into the bottom of this next zone. Now, some traders will enter halfway through. Some traders will enter as it hits the top of the next zone. I am a little bit more patient. So I will wait for price to come all the way back down and touch the bottom of the next zone. Now, this could add up to being a particular setup that doesn't occur all the time because of me waiting for price to come all the way back down and enter on the bottom. All right. Mostly, sometimes price could just pierce the middle or pierce the top and carry on upwards. So for this particular one, price did retrace all the way back in. Okay, after closing above it, next candle retraces all the way back in, carries on up, and we get a nice 1 to 3 risk to reward trade. Our previous target, our previous target, our target, right, being previous price structure. Yes, one support flipped resistance. And we can see that over here. We have liquidity. We got strong candles closing just below this area here. So it is an area of interest. And this is why this was my target for this double bottom. Because we see price comes, bounces off this area, which is support. Okay, bounces up, closes below it. Next candle, we have a very weird looking bullish candle with a gigantic wick. Nonetheless, price closes below it. Next candle retraces to it. So we can say this area has definitely been flipped from support. Okay, let's put from support to resistance. Okay, this is why this was my target. Okay, this area here was my target. And we can see that after price retraced deep into the next zone, it did indeed carry on and pierced the target, resulting in a great 1 to 3 risk to reward setup. All right, so that was last week's late Friday night trade, early Monday morning. Let's keep watching this pair to see what it does. What I am noticing before we close this video off, let's delete this right now. I'm sure some of you have noticed this as well. Let's keep zooming out. What we are looking for, which is definitely showing us something with our MACD divergence, is this. Okay, we can see that price is sort of forming this particular pattern, right? We have the divergence playing out very nicely. So we would likely be waiting for a break above like this, and then waiting for a retrace to this area before deciding to carry on this pair long. If we have this sort of setup occur, I'll definitely be posting about it. Until then, that is not in the cards right now. We have just traded our double bottom, and that was today's trade. All right, let's wrap up this video. Thank you all very much for watching. If you have any questions about this particular setup, please post it below in the comments. We will definitely get back to you. Our website link and our social media profiles are linked below in the description as well. Please remember to hit that like and subscribe button on your way out. Thank you once again for watching, and I will be definitely seeing you all in the next one. Thanks for watching. Bye.